Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is actually, we're looking at the venerable MapDT 1.0, the original version, banks a staggering 78%. Yesterday, actually this was Wednesday. Today's Friday, the second day of December 2011, and as you can see, banks a staggering 78%. That was in one day. Now, as we've often mentioned in these videos, for those of you who have been following these videos for years, we have the 80-20 rule just like most other companies. 80% of our profits, and some could argue 90% of our profits, are generated on just 10% of the trading days. It's generally about an 80-20 rule, we'll call it that. We've just completed, look at this meteoric rise for the MapDT, the original version. It's the original day trade version for the somewhat larger accounts. This is just a $20,000 account. We have them for $20,000, $30,000, $50,000, $100,000 for the MapDT. But it's for your general, day trading, day trade. Excuse me, one second. Day trading portfolios, but 78% in a single day, leading to a very impressive 443% gain for the last 200 and so odd days, which is essentially since January. They're about 250 trading days in a year, and as you can see with that 78% gain on Wednesday, a couple of days ago, we're now at 443. Hold on one second, we're going to pause that real quick. Alright, and we are back. The venerable MapDT up in a staggering 443.43% as a result of the 78% gain just on Wednesday, the 30th day of November, the last day of November. What a day it was. Again, 80-20 rule. Sometimes one could argue the 90-10 rule for the portfolios. You kind of wait around, have small losses, small gains, and then you just have these meteoric rises. In fact, it's what Bill O'Neill used to talk about in terms of his, I believe it was canned slims, kind of how he picked stocks. And you always had to have at least five. A couple would cancel out, one would be okay, and one would be meteoric. And that's essentially what you have in most trading and investing. A lot of people just kind of try and subscribe to one system and hope that it does well, but it really pays to be diversified. That way you can have certain systems that'll just have those meteoric rises while others may be lagging a little bit, and that's kind of what we offer at the MiniAnalyst.com, is definitely diversification so that you can participate and hopefully limit the downside as well. That's just an added bonus, but nevertheless, as you can see, almost 450% for the MapDT. That is now eclipsing, that's the original version, that's eclipsing the MSAUDT at 439%, which has been leading for the lion's share of the 2011 year. And actually the MapDT has kind of, over the last month or so, been tipping its head up there. So it's been very interesting. The rest of the portfolios, Delta DTS up 370%, and we are way off track, aren't we? We're supposed to be looking at a market. Let's see if we can't go ahead and look at a market. There we go. This is we just missed our beautiful trade. We're going to go ahead and issue it. What perfect timing. You had a confluence of several indications leading to a beautiful buy at 12.52 on the ES. So we're going to go ahead and get that out there. Buy at the market's 53.25 as we're looking at it right now. Buy the ES is our free informational day trade. We've had the gap open higher following the, we'll talk about in a second, a couple of days ago. We had that news overnight. About we'll go ahead and talk about the central banks across the globe essentially saying, well, we're going to flood you guys with cash, the businesses, and that's why you get this huge move up on Wednesday, and it essentially negated our bearish bias, and we haven't quite moved to bullish yet. We're waiting for, again, we'll talk about that in a second. That's a daily chart, but right here, as you can see, the market's even going higher as we speak, so I'm not sure you're going to be able to get this trade or get into it, although one could argue it's never too late to get in long a bullish trend, someone once said. And of course, if we break out to new highs and get above this 60 level, which is kind of resistance for the ES, the mini S&P 500 futures, then it will be a bull trend and confirmed, and certainly we're going to move back to officially bullish on the market. But for the free informational day trade, 53.25 was the call. The actual trade was at 52.25. You see this, the highs of yesterday, Thursday. You saw the market come down very shallow. Gap fill, come down to simply retest the highs, and now you have the trend in convergence with the prior day's highs. That's just a beautiful opportunity. We actually just added some long exposure on a discretionary basis. Beautiful opportunity to get long at 52.25 on the market on the ES, and as you can see, again, as we're talking, the market's certainly taking notice. We're looking at our intraday dynamics. You can see it's full all out bullish. Oh, save this indication right here, which this one is really probably it's certainly important, I could say, but you know, sometimes it may be a little bit wrong. So you really look at the entire picture. From price technicals, we have the horizontal resistance now broken, and we've retested that resistance. So now it's on support duty. So you have an early session low. So the horizontal price technicals are confirming. We would like to have seen slightly higher low here, but again, with the confluence of the indications there around 1250, that'll do. And so obviously, if we get below, if we hit 48 or so, this setup's pretty much negated. Nevertheless, we do have bullish, 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 although they aren't particularly impressive. Impressive was Wednesday, as you can see right there. Wednesday, the 30th day, we had all out screaming bullish. But again, see this indication right here, this key indicator, saying the bulls. And then yesterday, as the market was quiet, it was saying the bears, and it was saying the bulls. Nevertheless, kind of interesting. But there's your trade. So if you get this video in a little bit, go ahead and buy from 52 up to, we'll call it 55, and certainly stop out around 48. That's a free informational day trade for the S&P 500 futures. We're going to go ahead and minimize that. And we'll be looking at the chart of the daily market. As you can see, I'm not sure if did we switch our official bearish bias? No, we're still officially bearish. Wait a second. We're officially bearish on the market, so I'm not sure why this chart reads, actually it doesn't read officially anything, but there was an official buy signal right there. I believe that was switched to bearish right around 1200 or so. We'll have to look back at that, but nevertheless, we're neither bullish nor bearish. How could you be bullish or bearish if you have a market that goes down like that and then straight up like that? I mean, you really can't. The horizontal or the price technicals would suggest you be bullish, but certainly we're just merely retesting the underside of the trend as we did here. We retested and went back to a newer low. We're probably going to get some pullback, certainly to retest this amazing convergence of support resistance from 1200 to 1225. We have all of our key measures of trend following support resistance that have clustered right here, and as you can see, you're getting these whipsaws. They came up and they came down, and now they've turned higher. So obviously we've been in a trading range for months and months and months. This was a trading range, tried to break out, came back into it, bled back into it, and now we're back above it. So it's just very interesting, the dynamics of the market, and you really have to be careful. But as you can see, we can certainly be profitable in these market conditions with our leading portfolio up 450%. Now that doesn't include slippage or commissions. Well, it actually one could argue it includes slippage because they're essentially live fills, and you could easily be filled there, but we'll say it doesn't include slippage or commissions. But you know, we don't trade that often. Honestly, our systems trade maybe 10 times a month. They certainly aren't trading every day, and they're certainly not trading several times a day, which would obviously make it the performance less than impressive if transactions costs were a larger factor. But nevertheless, we are here at that 55 to 60 mark. Actually, we need to have, there's a 200-day SMA. Now, we key off EMAs. This chart doesn't represent it, but there's a 200-day SMA that the market keyed from right here. And is right here at 1255. So that's the last bastion of trend following. We have the downtrend right there, obviously, and the 200-day SMA is right there. So the market was immediately magnetized to that level, and that's going to be the resistance. Are we going to stay with the free informational day trade? Yeah, absolutely. We're definitely seeing some bullishness here. Hopefully we get a break, but if we don't, we'll just look to trade it then. But that's kind of a quick look at the market on the daily. as you can see right here, MRSEM in a beautiful long, went short, and in a beautiful long. We'll go ahead and pull up the equity curve of that. Had a beautiful pullback, couple of nasty winners. Excellent time to get involved in this trading model, but of course it's one of our portfolios. $530 average net profit. Here's our free trading model. It's not really trading. $1,943 average trade net profit. Not sure what we got filled there at 51.50, but the way the market's coming down, it could be a stop. Let's take a look at the market, shall we? Actually, we already lost that, so we'll go ahead and continue. And moving right along, we're going to go ahead and minimize that. This is a new model, recently developed. Actually, the timing was incredible. It was developed over this week or so, and it issued a long around just over 40. I think it was around 42 or 3. 43.70, and what an amazing long it's been. Looks like the market's coming back. That may have been a stop out, but what an amazing long it's been. As you can see, we'll pull up its report. Now these do of course include slippage and commissions. Any of our trade station models do include slippage and commissions. $200 average trade net profit, $83,000 over the last 9 years or so. And there you can see the equity curve actually easily breaking the new highs, new greens, and in a nut that it doesn't even include the recent trade that we have $4,000. Just the timing was just incredibly fortunate to get in on this trade. At 43, right before the news that the central banks were going to flood the economies with cash, the banks, and so it was just absolutely unbelievable the timing that we started trading this model. With the long setup, and there you can see the last 10 years. And of course, we never participated in any curve fitting or optimization or what have you. We always use walk backward, walk forward analysis in our analysis because we have no desire to do anything but ensure that our systems are going to continue to make money. And so these are some of our. We can actually scroll through and see how some of our. Here's our EVR3. There you can see breaking out to new highs. We'll go ahead and make that a line. Look at that, beautiful. Just had another winner on a big Wednesday up. Unfortunately, being a day trade model, you don't really get to capitalize on the overnight news, but we did participate nicely. There you can see the EVR3 again breaking out to new highs. The ISR just switched to long. That's got an impressive $3,000 average trade net profit. ISRD unfortunately did not have the best setup. Had a long and then exited it just before the big move. Fortunately, we didn't get short. Generally, that would be a good shorting opportunity to get short on the bounce. Excuse me. Evo MCM. EVMCM, sorry, $155,000, $65 average trade net profit, but you're going to get a lot of trades here, so you're going to definitely be, look at that, breaking out to new highs again. Oh yeah, look at that. Look at the trades we had from this system the other day. That was huge. We had 6 contracts long in the EVMCM. 6 contracts long, so that was a pretty banner day. That's why you're getting, it looks kind of small, but in reality, it's a pretty big move. You can see right there. I mean, the equity goes from 146,000 to 150, almost $10,000. So that's a $10,000 move right there. So that's the MCM putting up some beautiful trades the other day. Let's see the CBR treading water a little bit. R30A breaking out to new highs, as you can see. And of course the B as well, and we just looked at the EMDS. But anyway, so how have our portfolios done? So let's a quick look at some of our systems, particularly top tier systems. So how have our portfolios done? Well, we'll just pull that up right there and we'll get to that, and that should be it right there. As we mentioned, 78% was the gain. We didn't, no wonder I'm speaking so slowly today. We didn't have our timer said, so I don't feel the pressure of the timer. So who knows how long I've been speaking. But up 78% was the other day, and then last Wednesday, Wild Wednesdays we should call them. This was last Wednesday, the 23rd, had another MSA UDT up 35%. $10,000 portfolio, trades 6 systems, 1 lot apiece. So the margin, it's only a day traded portfolio. Obviously the DT, the margin is about $3,000. But we recommend $10,000, given you might have a $7,000 drawdown. The average drawdown is actually less than that, so we definitely want you to be around for the average drawdown to be able to continue to trade without refunding, adding more risk capital. The MAP DT up 20%, Delta DTS up 25%. That was last Wednesday. That put the MSAU DT up 412%, MAP DT up 391%. Delta DTS up 337%. That's kind of been the top 3 for this year in terms of percentage basis. Bases. So then you go back and you look at Wednesday, and just puts everybody over the top. MSA UDT up 440%. Delta DTS is lagging a little bit. It was right up there with the guys, 337. Well, not quite, maybe 100% lower. But these returns are absolutely stellar, staggering. So if you guys are interested in these portfolios, you can go to the website and you can click on the MapDT. If you're interested in the MapDT original, we can get you involved in that. On the website is just the MapDT version 5.0. It's $28.88 per quarter, and you can go ahead and add to cart. You can also do you can check out actually. So if you're interested in, here's the returns that were updated over the last several years for the MapDT version 5.0, and but if you're interested in the returns for, we track actually live the portfolio returns of a few portfolios from Strategy Runner. So you just click there, click the live performances, and you can scroll down to the bottom there, and you see that there's a Delta DTS. This was actually hasn't been updated for last month, but the MapDT up 350% as of last month. So there's a performance, and we'll get that updated, and you can actually take a look at that. But obviously, you can see what we just shown you from Strategy Runners reporting. But if you're interested in that, go ahead and add to cart, and this applies to a few of our other models right now. Special, you can enter promo code video, and then just shoot us an email to that you'd like the MapDT original, you'd like to participate in that, the MapDT original, and you're going to save 20% on pretty much all of our portfolios, the MSA UDT, Delta DTS, and MapDT original, or the 5.0. So if you guys have any questions, go to the website, chat with the support team, and I hope we didn't leave anything out. Chat with the support team live. Looks like that free informational day trade is getting under a little pressure right here at 1250. But again, the stop I believe was at 1248 on that. So there's time to get in. And I hope you guys enjoyed the video, and we'll see you next time.